Hello and welcome to another Xero webinar for small businesses. And today's topic is how to find your gross profit margin in Xero. So to start off with, what is a gross profit margin? So your gross profit margin, or what you might see on paper is a GPM percentage, it's a metric used to assess your financial health. This actually just means it's calculating how much money is left over after your service or products are sold. So just jump straight into an example. The calculation is your gross profit divided by your revenue. So your gross profit is worked out after you take your revenue less all your cost of goods sold. So you want to take that final figure and divide that by your total revenue. And this is going to give you a gross profit margin percentage. So for example, I calculated my gross profit margin and it worked out to be 20%. This means for every dollar I earn, 80% goes towards my cost of goods, which means I'm making basically a 20-cent profit on my $1 that I earn. But now this 20 cent has to go and cover all my other expenses and costs. So it's really important to understand your gross profit margin, because this is ultimately going to determine whether or not you're going to make a profit or loss at the end of the day, and also understanding whether or not your gross profit margin is correct for your industry, because obviously every industry is very different and every industry is going to have a different gross profit margin on average. So it is something that you can discuss with your accountant and understand what it should be and how to improve it if you think it needs to be improved. It also allows you to then start looking at your net profit and how to reduce all your other costs, because I'm sure we're all in business to create a profit for ourselves, but this is obviously a starting point in making sure that you understand what your gross profit margin is and how to calculate it to begin with. So let's jump into Xero. So what I have in Xero is my profit and loss. So as you can see here under your accounting tab, I've just opened up profit and loss. If it doesn't look like this, you might have the old version saved or you don't see it in this drop down, just head to reports and then search for profit and loss and it will give you this report. So what I'm actually going to do, because we're only at the very start of February, this data is not going to be very accurate. I'm going to go last month and compare it with my last 2 months. So your profit and loss and any report you run is only going to be as accurate as your bookkeeping is. So whether you have all your invoices entered into Xero, which they should be up to date, and also your bank reconciliation. So once you know that's all up to date, you can go ahead and run this report, and then you know for a fact it's going to give you real life information. So I'm going to open up my calculator and make this a little bit smaller for us to look at. So as you can see, Xero actually already calculates our gross profit. So this is our total sales less our cost of goods sales, which gives us our gross profit. So this is the profit we're actually earning on the products or services that we're selling. So I'm going to go back to November and calculate our gross profit margin. So we're taking, like I said before, our gross profit, 4925, and dividing that by our revenue. So divide by our revenue, 12,610. And that's 39%, or you can times that by 100 and it'll give you 39.05%. So that's currently what our gross profit margin percentage is for November. And let's just see if it's consistent across the month. So we've got December gross profit divided by our revenue. So again, our last month was 39. It has dropped a little bit down to 36, but it's still quite consistent. And as you can see with January, we had a really strong month coming back after Christmas break, and had a really strong revenue come in. But obviously with all our sales increasing, our cost of goods have too. But let's just see how our gross profit margin has gone. So 20,000 divided by our revenue. So as you actually can see, our gross profit margin has actually increased for the month of January compared to, I think it was 36 and 39. Really important to, again, understand this number. I am just showing you how to calculate it. But if you do want to go into more depth, really great idea to reach out to us or your current accountant. Another really great report I do want to touch on is the business snapshot report. Rather than doing that calculation manually like I just showed you, again, it's really important to know how to do that. You can actually run your business snapshot. You can do it for whatever date period you like. You can't actually compare it like you can with the profit and loss. It does show you some comparatives though, but you can actually go down and it will calculate your gross profit margin. Have I gone too far? Here you go. So as you can see here, gross profit margin for last month is 44%, which is what we calculated ourselves anyway. This also is a great report to show you other information. We do have a YouTube video already discussing this report in more detail, so feel free to find that one on our YouTube channel. But that is how you do find your gross profit margin in Xero. So just a reminder to like and subscribe to our YouTube channel. We do have a lot of other great Xero videos out there, but also everything else. So as you can see, anything around investing, business, and all sorts. It makes for a good Friday night. And of course, if you do have any questions, you can reach out to us at Smart Business Solutions. Thank you.